Hey guys, welcome back to another episode of Ryan Makes Sense. This is part two of our several part series where we are reviewing high CAGR stocks. CAGR is compound annual growth rates. So this all stems from a video where we looked at the 3-year CAGR of three stocks that were basically up from 115% to 400%. So we created a scanner to look for these high value stocks. And so far we found quite a bit of great stocks. From the first video, we had ACCO, AMCX, ASTG, BAND, BATL, BRY, CENT, CINT, CMCO, and DLX. So potentially really good ones there. We're now on page 2, so let's go ahead and jump on in. All right, I'm going to go ahead and open 10 stocks at a time because it's going to make things maybe go faster. I don't know. All right, the first 10 are done. The first stock is DRVN. All right. Literally looks like it's been ping-ponging from $25 to $34. What's going on here? All right. Looks like it's super overvalued now. Look at these sales. I think it's turning around. EPS looks like it's turning around. Let's crunch the numbers here. So we have 2,130,000 in sales, plus 38,500,000 in income. They have a market cap of 4.62 billion, so we are going to add that. So plus 4,620,000,000, correct. Now we're going to add cash and remove debt here. Ooh, we see some insider buying. Okay. So plus 227,111,000. Total debt of 2 minus 273827. All right, and while we're down here, let's snoop around. Their cash has historically been pretty good. They had 500 million in cash. Now they have half that, so maybe they paid off debt. Let's see. Total assets is 6.4 billion. Is this US dollars? Yes. Total liabilities is 4.8, so not too bad. Total debt is 2.7 billion, so their debt is not getting any better. Let's look at the revenue. Revenue went from 492 million to 900 million, so it doubled. Then 900 million to 1.4 billion to 2.0 billion, so pretty much a double there. Now it's at 2.1 billion. Cost of revenue, it's in line. Gross profit, again, just growing like a monster. Very good. Net income, pretty steady. Net income's pretty low, actually, compared to last year. What happened? Operating expenses went up. Operating expenses went up. Okay. So we could see this get better. The CEO bought $1 million worth at $23.76. I like this. What does this company do? Just car stuff. Okay. Okay. I mean, look at this. This is just amazing growth. This looks really good. Okay, so let's grab this. We're going to be in for a surprise here, I tell you what. Divided by 61,960,000. $69 stock trading at 26. And I would betcha institutions are buying. Old data shows that institutions own 99.8%. I'm going to say institutions own over 100. 52%. Oh my gosh, what happened? Could be okay. They own 88 million shares out of 61, so I think there's a misprint. So I think they definitely own over 100%. if I take the same $69, if I take the 4.277 billion, 4,277,340. Okay, and then I'm going to divide this by 162,780,000. So even the conservative share price is $26, which is what it's at now. So I think it's kind of at a floor. We had an opportunity to buy at 23, and now it's at 26.90. So I'm at a loss for words. I think this is really good, considering they're almost doubling they're doubling their sales every 2 years. Pretty much, almost. I mean, that's insane. That is insane. So this is a really good one. DRVN current 26, fair is like 66. Stock is not accounting for major sales. Yeah, I mean, RSI is just kind of flat. Momentum's turning up, money flow is getting in, so yeah, this is great. Institution buys are kind of just keeping going up. Vanguard is adding, okay. Where's BlackRock? Whatever, screw BlackRock. Okay, so DRVN, this one looks great. Let's move on to the next one. Wow, this went from 22 to 38. Yeah, we might have missed the boat on this one, but let's see. I don't know. It actually could be getting heated up. Next resistance looks like $41, so we'll see. Then maybe a clear path to 73 and then 100 again. So sales is good, turning around. So wow, this might be a really big one. So 1,590,000,000 share sales in sales, plus 53 million in income. That's really good. Market cap is not over $1 billion, so we're not going to add it. We're going to add in the cash of no cash. Total debt's 413 million. That's 413. Yep. Okay. And this is going to be divided by 15,740,000. $78 stock trading at 37. And it's got legs. 1.48 billion in sales. Now it's at 1.58 going on 1.6. So net income's killing it. Profit's killing it. What's the gross margins? Gross margins 28%, so almost 30%. Let's take a look at their assets. Total assets 1 bill, total liabilities 670 mil, not bad. Total debt 413, which is pretty high for them. Their cash, they don't have any cash. Unless they're just investing in like the company. I don't know what they're doing with their free cash. So this looks good to me. I'm gonna get, let's see, institutions. It shows institutions own 72%. I'm gonna say they probably own more. Yeah, they own 76.9%. So again, stock price is good. It's got I think it's got legs. So DXPE current 37, fair was 78. Momo, RSI, MFI, plus, institution buys. Okay. Nice, this is a good one. 37, yeah. Okay. Let's go on to the next one. All right, EBIX software. Wow, look at the sales. EPS going down. Wow, it's heavily shorted. What's going on there? I don't know. Cash, I mean, they're pretty fine on cash historically. Total assets 1.5, total liabilities 920, total debt 647 million. They make $1 billion plus 52. They have little cash. They have big debt. Seeing some resistance right here. I don't think I want to chart. I mean, it's showing it's undervalued. We'll do it, but I'm not optimistic. 1 billion, 10 million, yes. Plus 52 million, 500,000, yes. Total cash, so plus 110 million, 640,000. Minus total debt of 647 million, 290,000. Divided by 24 million, 250,000. $21 stock trading at 24. Yeah, I just don't think I like this one. It's been trying to break this 50 SMA like right here, almost right here. It just can't break it. So I think we're going to see some more downside. Wow, it's trading at 1989 levels. That's insane. Unfortunately, I think we got to see more downside. Let's see if we can chart something out here really quick. Let's see. Probably even go there. Yeah, so I mean, like, I chose here because we have resistance and then resistance, resistance, double resistance here. So I think we can expect to see. I don't think it's going to go down here. Okay. Yeah, this looks a bit more realistic. The flat line. I'm gonna do it because I think this might be worth it in the long term, long end. Okay. Go right. I mean, what if I go right here? This is valid. This can be valid right there. So we want to see this, and I don't, if this is a stock of yours, don't be offended because I don't know what I'm doing. I think we would want to see this around $13. And then I think all this other stuff would be good. So yeah, let's come back here in 2024. Yeah. All right. I mean, it's not the worst stock. Okay. EVOCZ. Weird. Their sales used to be really high, then it took a big hit. 2018 levels. I mean, it's trading at 2018 levels. Ah, it looks overvalued. Why is this screaming overvalued? Oh my God, look at these cells. Oh my God. Oh my gosh. This is just insane. Wow. Wow. Sales used to be 1 billion, now it's 800 million. I don't I don't know. Cash is decent. Total assets 1.8, total liabilities 1.7, not bad. Total debt 885, not bad. It's actually going downwards. So they had massive debt and they're going down. So if I go back and look at their margins are actually pretty good. Actually, this year their margins are not that good. 26. Their margins were better a couple years. No, not in 2020. They got hit really hard. Um, yeah, I don't think. It's just been trading literally sideways for 3 years. So screw it. We're gonna jump into it. They do 101,300,000 in sales plus 60,400,000 in income plus a market cap of 1,440,000,000 plus cash on hand, which was plus 110,920,000. Total debt of 885,360,000. And divided by 91,910,000. $16 stock trading at 11 bucks with sales kind of finding their way back. What's the trailing? Yeah, they still got, I don't know. We're gonna have to pass on this one. They could be good in a couple years, but yeah. This one, okay, looks like it just started turning upwards. Entertainment. Wow, they make $5 billion, but they lose 184 million. Wow, they're reversing. They're going up. Ooh, okay, this might be a really good one. Okay, 5,390,000,000 in sales, correct. But they lose 182,400,000 plus the market cap of 10,600,000. Ooh, they got some big boy debt, I'm guessing. Balance sheet, they have 770 million. Or yeah. Plus 767,830,000. Give me like 8 billion in debt. Total debt 5 billion, not bad. 5,168,000,000. Yes, okay. While we're down here, let's just take a peek. Cash. Ooh, cash is really low. Well, it's back to 2017, 2018 levels. Total assets 12.5 billion, total liabilities 10.6 billion, pretty close if you ask me. Total debt is historically in line, kind of high given our rate environment. It's going to hurt them. Look at revenue. Revenue was 2.3, then 3 bill, 3.6 bill, 4.5, 3.4 bill, 5 bill, 5.2 bill, 5.3 bill. It's growing nicely. Gross profit is growing nicely. Net income is honestly all over the place, unfortunately. So they keep going back and forth between profitability each year. With all that, let's go back up here. And we're going to take this, divide it by 60,290,000. $189 stock trading at $23. Do institutions feel the same way I do? That's a screaming buy to me. EPS should continue to grow forward. Sales are going to continue to do well. I'm going to guess institutions own over 100%. 95%. They actually went down. Vanguard added. Man, this is a entertainment company. Let's just look at it. I don't really want to read your story. Let's look at the network, I guess. All right, I guess. I don't know. I'm looking at their story. Okay. So they're a big conglomerate media company. Okay, that makes a lot more sense. So with that, I think this is undervalued. Yeah, I think this is undervalued. Um, do I want to get my feet in now? That's a good question. It's gonna bounce back and forth between 23 and 26. And then we have this resistance here as well. Coming down here. So, what do I think? We're in a couple patterns here. We're in an ascending wedge where it's some resistance, and then we're also in a descending. So ascending triangle, then a descending wedge. So RSI is kind of going back down. So I think we're going to come back down, honestly. Even though money flow is going up, I think RSI is kind of pointing down. So with this one, if it goes down, the lowest I could see it getting probably $15. The 182 negative income is not bad. They were positive. They were neg positive. Triple neg positive. Now they're neg again. Cash. How much cash do they have? 767 million in cash. They could pay off their debt. Why are they? Just trying to get a better gauge. Yeah, the daily's looking like it needs to come down. Looks like it's gonna break down, honestly. So we're gonna come back. We're gonna look at this one in September. Wake me up when September ends. All right, very cool. Moving on to EPAC. EPAC. Okay, wow. Wow, it's been literally trading sideways for 6 years. Oh gosh, they're trying to get back to normal. Gross margins are really high. That's good for them. Sales is supposed to be down this year, but how are they doing? No, they're doing well. They're doing well. Their sales are actually good. So, this actually looks good to me. Cash is good. Total assets 757, total liabilities 438. This is not bad. CEO is day trading his own stock. Dude, he literally bought at 1751 and then sold for a $5,000 loss. $4,000 loss. Or the EVP. What is he doing? Okay. I mean, I like it. It's kind of weird that the EVP was doing that. Is he still EVP? Marcus Limburger? Yeah, he's still there. What is he doing? Wow, he dodged a bullet by selling then because Wow, this goes all the way back to 1980s. Wow. So the 365-day SMA, it's bounced off of it before. I actually think this is bullish. I think we are in a bull flag. So right here is our flag pole. Here's our flag. So RSI is getting strong. Money flow is getting strong. Let's chart this one out because I think actually this is going the right way. So, and they're, yeah. So I think this is on its path to getting back to golden. So 589,400,000 plus 42,800,000 plus 1,510,000,000 in market cap. Let's add cash, remove debt. Plus 120,700,000 minus is this USD? Yeah. Total debt is not that much. Wow. Minus 204 million. All right, you guys, I think we found a good one. Divided by 55,110,000. $37 stock trading at 26, and it's got legs because it's 2022 they brought in 571 million, and they're at 2023 now, and they're at 589 million, and there's still 4 months left of the year. So, and this is where I'm seeing the data. So they're doing good. I think they're on their way back to good numbers. Let's compare gross margins back when they were 2016, 2017. So 616.59 minus 356.2 divided by 616.5. Gross margin was 42%. Gross margins now are 49%. Wow, that's efficiency. I like this one. I like this one. I like this one. So $37. Okay. What was it? Dang it. $37. And what they are discounting is stock is currently discounting historical gross margins. And then we have RSI, momentum, and then money flow plus. Okay. And I'm going to guess institutions are buying hand over fist. I'm guessing hand over fist. So institutions own 106%. Now it's 121%. Holy kaboli. Yeah. We can kind of see a little right here. It's wow. Okay. Vanguard, not much. BlackRock, same. T Price Row sold out a bunch. Wellington sold out a bunch. So I think this is actually getting preheating up. So yep, I like this one. I would buy this one. All right. ERO. Ooh, coming back to test all-time highs. Ooh, sales 559. What is it now? Oh, copper. We're going to discount this because the data is not clearly available. And that's a lazy part of my fault, but I'll let you guys as homework look at ERO. Go to the website, look at their filings. Moving on to Estee Lauder. Oh, Earthstone Energy. I thought ESTE was Estee Lauder. My bad. Ooh, historically not a bad price. Not a bad price. Ooh, and it looks like it's breaking out. Okay. Ooh, I'm excited. Ooh, money flow's leaving though. RSI is going up, so this kind of weird combination. All right, so let's run some numbers on this bad ESTE. Okay, So wow, 1.91 billion in sales. Very nice. Plus wow, 546,500,000 income. Wow. Plus 2,190,000,000 in market cap. What? Oh my God, look how undervalued this is. What is this? Oil. Okay. What in the what? No cash. That's scary. Total debt. Ooh, not that bad. Minus 1,055,560,000. Yes. Okay. And it looks like they don't really hold cash, which is concerning. I don't know. Total assets 3.9 bill. Total liabilities 2.3 bill. So pretty good buffer there. Not the 2-to-1, but it's a pretty good buffer. The best buffer would have been, I mean, they've had a 500, 300 mil, 300-ish mil, 300. This is the best buffer they've had, I think, in a while. So this is good. This is healthy. Let's look at revenues while we're down here. 42 mil to 108. That's a double. 108 to 165 to 191, 144. They got hit in COVID pretty bad. Holy cow, they quadrupled in 2021. They tripled from 2021 to 2022. Holy cow. Gross profit is just, it's in line. Net income is beautiful. Oh my gosh. Oh my gosh. Is this, did we just uncover divided by 74,800,000? $48 stock trading at $14. This has legs too because oh my God. Dude. I feel like I just uncovered a secret. Oh my gosh. Look at their sales. Insane. They went from 1.7 billion last year and they're about to cross 2 billion. And they have 4 months left. Oh my gosh. Oh my gosh. Oh my gosh. ESTE. It says institutions own 91%. Oh no, they own more. 98. Oh my gosh. Dude, they're trading at 2017 levels. Oh my God, in 2017, they did 100 million in revenue. Now they're doing 10 times that. Oh my, they have 10 times assets. A lot of liabilities, but oh my God. It's like they diluted some shares a little bit. Oh my God, you guys. Are they doing like any offering? They did an offering of 500 million in June. That was last month. This is severely, severely, severely. Oh my gosh. Dude. Okay. Wow. Current 14, fair 48. Oh my gosh. Insane sales year over year. Oh my gosh. What's going on with their money flow is kind of going down. RSI/Momo's up. Dude. Oh my gosh. Oh my god. I mean, the best play would have gotten into this in December of 2021. Oh my god. They've just since 2021, they've tripled. Oh, I was reading the wrong information. Oh, this was 2020, December of 2020. They still tripled. Dude. I mean, the stock went from $1 to 20 and now it's 15. So it's a little hot, but it's got it's undervalued. This is just insane. Great one there. EVRI Holdings. Wow, look at this big bear or big bull flag. Flag pull from $2 to 25. Flag down here. We're gonna see a big reversal here soon. Oof. Wow. Oh yeah. Oh yeah. Sales 782 million last year. We got to be now it's at 807. Okay, let's do the numbers on this because the stock or the technicals look really good here. So, wow. Imagine. Okay, let's stop. Let's just run the numbers. 807, 807. I got to do longhand because we are in the billions. So 807 million plus 117 million. Income plus market cap is 1.32 billion. Okay. Ooh, big debt though. Big debt, big debt, big debt. Cash they have. Wow, quite a bit of cash. Plus 293 million, 390,000. Debt though, that debt though, that debt though. Total debt, not that bad. 987 million. Not that bad. Let's take a peek. Cash is historically high. Good. Total assets 1.9 bill. Total liabilities 1.7 bill. Ouch. How'd they do during COVID? Oh god, and during COVID they had more liabilities than assets. Oh gosh. Oh gosh. So they're trying to get that gap. Wow, they had more liabilities in 2017, more liabilities in 2018. They just broke out of that horrible that's ugly. That's pretty ugly. Uh total revenues. Wow, back in 2016 they were 859 million and now they're back at 807 million. Oof, they're just barely getting back on their feet, you guys. Gross profit. Gross profit. Okay, okay. Gross profit is the strongest since ever. That's worth mentioning. That's really good. Okay. So I think they're on the path of becoming doing very well. Um yeah, let's go back up and divided by 88 million, 86,920,000. $17 stock trading at $14. And then with legs, does it have legs? I mean, they're not really guiding that high for legs. For 2023, though, they're already doing well. I think this is a good. Wow. So let's study the chart a little bit more. So MACD reversal here, very good. Now it's going down and it's still going down. So we don't really see a clear reversal yet. However, the RSI has flattened. We do. The RSI is going up a little bit. So, but it could be a fake out. That's the big thing, fake outs. So They're not touching their debt. They're not making any payments to it. Gosh, this is just so... This company could turn on a dime and be Vegas's next hottest stock. Man, I mean, that's a huge cup and handle, though. 16 and 25, that's a $9 difference. So cut the difference. So if $21 is the cup high, the cup low is 20. So I mean, this could be a $44 stock, $50 stock. If this is truly a cup and handle, which I think it could be. So, if you think about risks, I really want to consider this one because I live in Nevada and I know the traffic is up. It's huge. Wow, I went from $2. So, what are institutions doing? They're probably smart and they're buying. Institutions own 90%. That's old data. New data says they own 110%. Okay, that's a 21% swing, basically. Dude. Vanguard sold a little bit. BlackRock bought. BlackRock bought. So what is the risk here? The risk is, I mean, their debt is the biggest risk, honestly. Why aren't they touching that debt? They have 290 million in cash. Total debt is 978 million. Dudes. And they're not even, it's the debt. Okay, the debt was 981, now it's 978. Okay, so it is going down from 1.167 billion. So they've been slowly paying it off since 2017. Not enough. Like 3 million every year. This is just horrible. What are they waiting for? I really don't know. Nobody's really selling. This person sold some, but they also have this option here. So, okay, Judge Joffrey sold 6,000, but he's got the 6,000 here. David Lucacere sold 38,000. He's got 38,000 right here. So, I mean, it's offset. Darren Simmons, yeah, offset. So, yeah. Yeah. Man, this one's really killing me. Um, let's draw. Let's draw some lines because that always helps me. Okay. So, I mean, is it undervalued right now or is it valued? It's kind of undervalued. It's at $14. And then this major accumulation here, I mean, it's just been kind of ping-ponging for about a year. A lot's changed over a year in a good way. Money flow right here. $7 to frickin' 14 and then just collapse. COVID, boom. I mean, this is support right here. It's bouncing off of the support of 1390. So I like it. I'm going to note it down. So it's on the bottom of this Bollinger Band as well, which historically, if you bought the bottom of the Bollinger Bands, you've always been pretty healthy. So let's see. Yeah, it's near the bottom Bollinger Band. I mean, this has been riding the Bollinger Band for a while. This one's barely been just bouncing off it. This is actually having a hard time with the 50 SMA on the monthly. Yeah, it's good to know. Again, it's having a hard time with the 20. Again, accumulation. If you have a long-term, I mean, the dips, like the money flow index keeps getting lower. Like it's high, not as high, it's turning, and it's probably going to go lower. So we'll wait on EVRI, but ER8, 9, okay. Not a bad one, just not the best one. EVTC looks like it's breaking out on the daily. Wow, okay, it's breaking out. Look at this. Look at the RSI moving up, moving up. EVRTech. All right, look at this consistency, consistency, consistency. This is going to be a buy because we have sales stair stepping. We have EPS stair stepping. The only time it would not be a buy is if it's deathly overvalued, which look at this, it's not. So let's bust out the handy dandy calculator. So we have 628 million in sales. We gotta do longhand because billion markup. So plus 230 million, 200,000 in income. That's really good. That's like 30% right there. So they offer dividend, which makes sense. Plus 2,530,000,000 in market cap. Ooh, look at all these sales. Ouch. CEO, everybody's selling. Okay. Plus 197,230,000 in cash. That's great. Total debt minus 430,250,000. Still really nice. Let's just look at here. Cash is pretty much at a good high level. Total assets 1.13 billion. Total liabilities 660 million. So almost a 2-to-1 there. Total debt is decreasing. Wow, they're doing good for them. They've been paying down their debt since 2015. Good for them. Good for them. Total revenue is a monster. It's a monster. 380 mil, 400, 450, 487, 510, 589, 618, 627. So it's doubled in revenue since 2016. Profits are following along. Profits haven't doubled though, so that's just a quick call out. Look at this net income. This is beautiful. This is beautiful. Whoever's doing this is doing a great job. This is beautiful. Wow. This is straight up beautiful. Divided by 64,200,000. $49 stock trading at 39. And it's just stair stepping. It's beautiful. This is so good. 618 was last year. Now it's at 627, and we still have 4 months. 4.5 months. Yeah, 4.5 months. Wow. You guys, this is great. What kind of company is this? Infrastructure. Look at this long. This is the longest accumulation downtrend in history. This is beautiful. I'm gonna say EVTC over 100% ownership, easy. 119% ownership. That's, oh yeah. Look at this. Insane, insane, insane. This is a long-term legacy hold. Oh my gosh. This is almost at levels in 2019. Wow. Wow, 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 wow. Wow. This is a screamer for me. EVTC current 39 fair 49 heavy discount on sales. Momo plus RSI plus money flow. What's the money flow? Money flow is turning up. I would buy this one on Monday. I would buy fractional shares, which is kind of annoying, but let's see. I could probably get it lower if I waited. I don't know. It's breaking the heck out. Look at this. Oh my goodness. It's hot. Okay, it should maybe come down. I don't know. It's really hot. I'm adding all these to a watch list, by the way. So I think you should do the same for stocks that you like. So Fantastico. Let's move on to the next 10 stocks. All right. EWCZ. All right. Wow, look at this. Momentum turn. RSI is like not doing much. It's like, I don't know if it's going to go up or down. Money flow is like, I don't know. European Wax Center? What the heck is that? Sales are good. EPS is turning around. I think we might have found a diamond in the rough. I don't know. It says it's super overvalued, but I don't know. I'm skeptical. 211,800,000 in sales, plus 4,900,000 in income, plus 1,200,000 in market cap. Yeah, I mean sales aren't bad, Revenue, sorry, except revenue. Okay, cash they have 44 plus 44 million 22,000. 44 million 220,000. Yes. Total debt, give it to me. Not that bad. Minus 374,940,000. And historically, debt is high. Total liabilities 637. Total assets 716. Wow, that's not that much. That's less than 100 million. 613. So they're kind of going off the wrong path here at the moment. Cash is good. Their cash is kind of at all-time high in the all-time high area. Revenue went from 154 in 2019, 100 mil in 2020, 178 in 2021, 207, then 211. Gross profits in line, growing. Net income decreasing. Okay. So this is not something that's like required for people. Let's finish my calculation here. This is going to be divided by 44,120,000. $24 stock trading at 18. Oh my gosh. I don't know if I see the legs on it. Let's see what the institutions are doing. EWCZ. Institutions are long, big time. Look at this. Is that $1 trillion? I don't know, a billion? Yeah, a billion. They own 56 million shares. There's only 44. What's the shares outstanding though? 47. This is, yeah. Wow, they're opening a ton of locations like crazy. Let's see what their products are and see what their reviews are on Amazon really quick. Shop all products. Okay, I'm just gonna go to Amazon really quick. European Wax Center, let's see. Ingrown hair serum. Okay. Good product reviews. Good reviews. All right. Do they own these? Does European Wax Center own that product, KP? Let's see. They don't. I think someone's just running ads against the company. Yeah. Okay, so decent. They're opening tons of products or tons of stores. $18, $24 stock. I mean, they're continuing to expand. So they had 207 million last year. This year they're at 211 and they still have 4.5 months to go. How much more sales can they do in 4.5 months? I would say at least 50 to 80 million. So that would put them at like 250, 260, 270. That would be pretty big growth. That's 100 million in 2 years. I'm gonna do it. 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 I could buy one share of this on Monday. I would do that. But let's see. EWCZ. Current 18, fares 24, expanding like crazy. Stock ping pong from, gosh, it's really just ping ponging from 17 and 25, 21, 16, 21. I think I would buy this at this price. Let's look at the weekly. Yeah, weekly R size coming down, but it's kind of like kind of looks like it's taking a breather. Like right here. Yeah, taking a breather. Let's see here. It's coming back down. Okay. Yeah, I could probably get it at like 17. Earnings are on the 9th. Or was that old stock? Yeah, earnings should be coming out in August. So, I mean, this went from 93% ownership to 111, so that's 18% increase. You know what? It's kind of like what we're seeing here is a ascending triangle, and it's really, yeah, the multiple top right here. Multiple top, I think the multiple top's more like 19. So it's coming up, resistance, resistance, resistance. We could see it come back down below 14. MACD is coming down as well. So I think I have some time to wait on this, but I think long term, this is a big buy. And I'm comparing this to Chipotle. There are two different sectors, I know, but Chipotle, when it first came out, was kind of the same for me. I was like, I mean, when did Chipotle? I don't even know. Oops, sorry. So yeah, this one's I've got it archived, so, or cataloged, so we'll look at it later. EZPW. Wow, almost $1 billion in sales. Looks pretty consistent, strong. Is it overvalued? Is it stagnant? It's, oh, look, it's stagnant. Look how stagnant it is. Okay, so it's obviously in a clear cyclical, coming out of a cyclical bottom. So running the numbers, 972 million plus 50 or 29.5. Add cash, remove debt. Wow. Plus 206.303 minus debt of 313.09. Okay, not too bad. While we're down here, cash is mid. It's okay. It's actually the lowest since 2019, which is okay. Total assets 1.3 billion, total liability 6.5. So that's literally a 2-to-1 assets dwarfing rate, assets dwarfing liabilities. Total debt continues to grow. They paid it off. They were paying it down and then just continued to grow. Assets are growing, good. Total liabilities are growing as well, so not good. Total revenue 730 mil, 747 mil, 800, 847, 822 got hit COVID, 2021 700, bounced back to 886, bounced to 972 now. Are they taking account 972? This is going to be over $1 billion for 2023. That's a big jump. Well, let's not get ourselves. Cost is okay. Gross profit is in line with what we'd expect. It's growing. I mean, gross, yeah, it's the highest the gross profit's been. Net income, it's kind of all over the place, but this net income's not going to be as high as it was in 2023, and that is because of operating expenses are up. Interest net income is huge. It's like triple what it was in last year. Yeah, so I mean, it's on the right path, honestly. It's a pawn services, okay. People get desperate in crazy times like now, so yeah. I could see this being a really strong play. They haven't even accounted for the 1 billion in sales here, so I would get in. I would buy a couple of these shares on Monday actually over the last one. So let's open our calculator and we're going to divide. This is a million, so divided by 51.76. $17 stock trading at $8. This is a easy bet, easy buy for me. Current 8.77, fair 17, discounting the 1 billion in sales in revs for 2023. Get the heck in while I can, right? Yeah. Okay, so long term, massive op. Hell yeah. And institutions got to be soaking this up like water. EZPW over 100%. 127%. OMG. All time high. What? All time high, even higher than Dog. What? How far back does this go? Dude. My head's in the way. Look. OMG. You guys. Okay, well, we found a behemoth. This is 27% plus 5. This is over 30%. This is a... Oh my God. This is insane. This is insane. Wow. Okay. So this is a good one. Please buy on Monday, man. I'm just gonna put please buy. Do your own homework on this one. Wow. Whoa. Whoa. Okay. And where do I see this one going? I mean, potentially back up to 36, honestly. They're gonna do 1 billion for 2023. Oh my God. Earnings per share this year, 295 million. Wow. That's insane. So again, probably the best one we've seen all day. All right. Next is FOSL Group Luxury Goods. Ooh, look at the sales going down. We don't like that. What are the sales now? Over 1.6? No. Net in. We've got to pass on this one, unfortunately. Sorry. What's the monthly look like? Yeah. Yeah. I mean, just not. Look at this. It's just going down. We're going to pass. FRG. Ooh, wow. Look at that gap up. Crazy. Ooh, look at long-term support on the 50. And it's getting ready to coil here, so this is a good one, in my opinion. Okay, wow, 9% dividend almost. I don't know about that. Look at the numbers. Look at the sales. 4.4 last year. What is it now? 4.3. Is that true? Okay, so it is true. Look at that net income, though. We're currently where we were last year, but we're paying more for it. Gross profit is less at the same time last year, almost, pretty much. What's going on? Cash is pretty low compared to the last 2 years. Total assets 3.6, total liabilities 3.2. What does this company do? Owns and operates franchises in 6 segments. Vitamin Shop, Pet Supplies, American Freight, Buddies, and Sylvans. Man, I don't know about this one. They exploded from 2019 to 2020. From 149 million in revenue to 2 billion. Oh my God. What about their debt? Total debt went from 20 million to 463 million. Oh my God. They took a huge risk. This is honestly a huge cup and handle. So 54 and 39, so 54 and 40, so $47 handle. So 47 minus 4 is 40. So this is $80. This could be an $80 stock. This could be $80 based on the cup and handle target. But what has to happen is the company has to execute. And I don't know if they're going to execute this year. Let's run the numbers. Let's run the numbers. If it gets us to 60, above 50 to 60 bucks, I'll consider. That dividend though, okay. Let's just do 4 billion. 370,000. Okay, that's our sales. They lose 197,700,000, but they have a market cap of 1 billion barely. 1 billion, 20 million. That's barely keeping them alive right there. Cash is 80 million plus 80 million, 78,000. Total debt, not that bad compared to the bigger picture, 2.8. All right. And then we're going to divide it by 25,740,000. $133. Okay, so that gets us to a decent. I mean, the stock is being heavily shorted as well. Institutions, they better be buying here. FRG. FRG. Okay. It's got to be over. Dang it. What's going on? It's not very clear here. Not really clear. Sales have been doing amazing, but they're about to stagnate. Let's look at their earnings call right here really quick. They missed. Wow. They missed by 71%. There's no other information. Man, I really want to like this one. Just because look at this chart. I mean, it looks beautiful. But I think it's going to break down even further. It just missed pretty bad, so we're going to pass on it. I'm going to note down FRG, come back. Oh, yeah, where we should see a tank. Let's see a tank down 2024. Yeah. Dang, dang, dang. Okay. Wow. This one's on a roll, literally. Front door. What the heck is front door? Oh my God, their debt. Their sales are great, but their debt. What do they do? Home repair. Appliances. Okay. Well, let's just look at their debt. Total debt, 609 million. Not bad, actually. Total assets, 1 bill. Wow, they are really cutting it close here. Oh my God, they were underwater. They're barely above water now. Assets is 1 bill, 82 mil. Total liabilities is 1 bill, 21 mil. Oh my God. What are they doing? Cash, they're barely clinging on. Oh my God. Is this an actual turnaround, or is this company like barely getting by? No insiders are buying. They will get over 1.7 billion this year for sure. They're in a good spot in terms of cost. So their brand is sticking. Gross profits are in line, but 2021 they did really well. Net income, yeah, they kind of hit a speed bump. They kind of hit a speed bump. Let's do the calculation here because I'm kind of just at a loss. So 1.68 billion in sales plus 91 million in income plus 2,790 million in market cap. Okay, so they seem okay. They just so scary right here. plus 292 million minus the 609 million in debt. I mean, overall, they're okay. Divided by 81 million. $52 stock trading at 54. It's just so close for comfort. So close for comfort. For me, the move, I mean, the stock's already up almost 100%. Look at this. I gotta see what institutions are doing here because I don't know. FTDR. They own 113%, so I want to see like 130% here. 126. So they're still buying, still chomping at it. Man, this is tough. This is really tough. Is the pain behind them? I don't know. I don't. Let's see what they have here. They have earnings coming up soon. No sneak peek. Let's just take a peek at their last quarterly. So, quarterly, and this will be the 6th. So 2021, they had 323 mil. 2022, they had 269. So that's a pretty big dip. I'm guessing it'll be higher than 269. 2021, they had 262. 2022, they had 292. So 30 mil. So I'm going to guess they're going to have 312. I'm going to guess. It's a pretty big dip, though. I don't know. I'm going to say 300. It'll be a move up. They did well for 20 Q1. Their Q1 did well. Am I a big believer long term? I think so. I wouldn't. This is not something I'm in a rush to buy. I mean, it went from 59 to 19, and now it's back up. We're just gonna watch it, but I like it long term. FTDR, September, yeah, 2023. All right, that one was hard. That was a tough one. Wow, this one had a really good day on Monday or Friday. Golden Entertainment, is this Vegas? What is this? It is Las Vegas. Golden Entertainment. Why don't they get bought out? They should get bought out. Let's run the numbers on this. I've never looked at this one. Seems pretty steady. 1.12 billion in sales. They're already at that right now, so they're going to do 1.3, 1.4 for 2023. Ooh, their total profits kind of mishmash. They had a really good year in 2021. Yeah. They're paying a little bit more. So I just want to look at the website really quick. Let's see the casinos. The Strat, Rocky Gap, never heard of it. Aquarius, never heard of it. Edgewater. I heard this one's really nice. Pahrump Nugget. Okay. All right. Charlie's Gold Town. You guys, I think I like this. I think this is kind of a little gem, and they might have been selling off. Do they own these? Sean Patrick's? No way. No way. I'm a member of Sean Patrick's, I think. You guys. I think I found a really good company I like. Wow. Okay. And it's ready to move. So let's crunch. They do 1,130,000,000 in sales. Good for them. Plus profit of 57,900,000. Plus market cap of 1,190,000,000. All right, let's add cash, remove debt. My coworker is actually going to Edgewater in Laughlin this weekend. It's pretty cool. Okay, they have 136 million in cash, which historically is decent. So plus 136,890,000. Total debt's gonna beat us up. Total debt minus, actually not bad, 901 million. All right. And it looks like they're paying down their debt since 2019. Yeah. Wow, this isn't even the trailing 12-month data. Ooh, is this not trailing 12 months? Oh, it is over here. Okay. Trailing 12 months, it is over here. Balance sheet is not. That is really good to know. Okay. So, let's not get excited. Total assets 1.5 bill, total liabilities 1.15, so about a $400 million gap in 2022. The gap in 2021 was 1.6, 1.2, so less than 400. So they're widening the gap a little bit. Wow, total assets in 2020 was 1.5, total liabilities 1.4. That's dangerous. Ooh, they were underwater in 2019. 2018, they were above water. That was a couple scary. That was one scary year. 2019, a scary year right there. Okay, so they're good. That 136 million in cash, I don't know what they're going to do with it. Could they pay down some debt? They are paying down their debt. They paid off 100 million of it. Wow, right? One bill, 111 million divide. Yeah, they paid off 100 million. Are they doing that for this year? I don't know. Okay. Trailing 12 months shows, I don't know how up to date this is, but I do like it. So we've got our number, and we're going to divide this by 20,540,000. $70 stock. This is good. This is really good for them. $78 stock. So I want to see some buying here. GDEN. There's buying here. Oh my God. I just want to go back to the Golden Entertainment really quick. Are they hiring for they're always going to be hiring for sales and stuff, but I'm looking for corporate. Yeah, they probably don't have corporate listed here. So crazy. This is let's see if it's 87% ownership is new. So it's up 16%. So this is something I could see myself getting into. And wow. If we're looking at cup and handles, left cup here at 32, high cup at 59. Let's go 52. $20, so $42 cup minus $6, so 36. So if we had 36 to 42, that's $72 stock. That's $72 stock. I just calculated 78. So I'm buying. I'm buying this. It might not be my Robinhood. I think I'm going to buy some of this in my retirement because Earnings are soon. The 31st aftermarket, which is a Monday, that's great. It's a cup and handle, like no doubt. Here's our cup, handle. This is a $70 stock, in my opinion. And they're paying down their debt quite significantly. It's not showing it here, but we can see that it doesn't show us the balance sheet, the trailing 12 months. And this could be a filing thing on their end. So what I see here, if they pay down, wow, they went from 138 million down to 11 million. So they paid off 127 million. Then they paid off 100, like what is this? How much is this? 1 billion. And they paid, so now they're down to 901 million. They paid off $110 million. And they still have cash remaining. Wow. If they pay off another, if we do 901 minus 110 million, they could be down to, this is monumental. This leadership could really do some great things here. And what a really nice portfolio they have, honestly. I mean, this is great. So we're definitely going to note this one down, and I really like it. So GDEN current is 43, fair 78. Gosh, and then we have cup and handle on monthly to 72. Just wow. Momo, RSI, and money flow index plus. Wow. So I'll probably be buying in my other accounts, but not my Robinhood, just because, I mean, I have 2 weeks. Do I have 2 weeks? I'll get $25 on the 17th, and I'll get $25 on the 14th, 24th. So that would be a $50. I could buy one share. That'd be kind of fun. Play for the earnings. I might do that. So that's really cool. Good, really good find there. That's an acquisition target, if you ask me. All right, GOOS. Loose off the goose. Historically, look at this. Money flow is going up. RSI is going up. Momentum is not really doing much. So, wow, 1.2 billion in sales. That's good. Look at the sales stair-stepping. We like to see that. Earnings per share is kind of wishy-wash. It's a Canadian company, so they're not going to have the data. So that's a bummer. I'm going to pass on this one, although historically it looks really good. Yeah, it looks ready, you guys. We could go like right here. Yeah, this looks great. It looks good. So homework for you guys, do this one. I'm not going to do it. Gray television. Wow, look at this hook. That's a hook. Broadcasting, they do 3.6. Oh my God, look at these earnings. This. Whoa, you guys. Whoa. I think we found the lottery here. Holy cow. Okay, let's just jump into the numbers here. They do 3,650,000,000 in sales plus 310 million income. Ooh, their market cap is not over $1 billion, so we're not going to include it. Oh crap, did I just mess up? I did. So it should be 3,365,000,000. Yes, plus 310 million. Okay. We're not going to include market cap, although it's going there. Wow. Explosive, very explosive. So they have no cash. We're not going to include their... Oh, but their debt, they're done. 6 billion in debt. We can't. Yeah. This is a no-no by our standards because total debt is there. Even if we added the 864 million here, it still puts us negative. Yeah, man. I mean, it just looks like a no-brainer buy, but it goes against my rules. So, I mean, 11.1 bill in assets, 8.3 bill in liabilities. That's great. But just that debt is, I can't, that's unfortunate. Sales went up. I mean, I want to, I really want to, I just can't. I just can't. So we're going to pass on this one, unfortunately. This is HCKT, the Hackett Group. Oh, wow. Sales have been pretty flat for 5 years. EPS is going down. Gross profit is going to eke out higher. I mean, overall, this company's trending up and to the right. There's no insider buys though, which is kind of weird. Why? I mean, it's been accumulating, so it's ready to move. Are insiders buying it? HCKT. 95% ownership, up from 78. So that's quite a bit. That's a lot. That's a big jump. Money flow is turning up. Everything's all the things are turning up. So let's just run the numbers here. 289 million, 0.3 plus 38.5. 327 mil. Market cap's under $1 billion, so we're going to go down to here and look at the cash. Plus 30.25 in cash, and the total debt is 59, not bad, 59.65. All right, so 298, and we're going to divide this by 26.84 for a share price of $11. Yeah, and it's at 22, so it's double the price of our metrics. So is it accounting for sales? I mean, sales 293 in 2022. 2023, it's not even past that. So we're gonna pass on this one, although it could be there. It's not. So that's a pass, unfortunately. Harmony Bioscience. All right. This one looks actually pretty good in terms of technicals. Wow, look at those sales. Oh my gosh. If we're over 437 in sales for 2023, we're at 471. This could be a monster. So let's run our numbers. So 471, I have to do everything longhand because we are in the billions for market cap. So 471.7, yes. Plus 189,500,000 in income. That is beautiful. Plus 2,070,000,000 in market cap. That's insane. Plus cash of 200 and so plus 243,790,000. Minus total debt of 191 million. All right. And just looking here, cash historically is all-time high. Good for them. Total assets historically all-time high. Good for them. Assets divided by this is over a 2-to-1 ratio, which is really good. Total debt is also dwindling. It's kind of hanging at its all-time high. Revenue, wow, they went from 6 million in revenue 2019. Oh my god, they exploded to 160 mil, 300 mil, 437 mil. This is insane. This is insane. Net income is just explosive. Gross profits, explosive. This is just all around explosive. Wow. This is divided by 58,290,000. $47 stock trading at 35. Wow. Wow. Institutions have to be buying this up. They have to be. Like, this is explosive growth. This is explosive growth. Oh my god. Oh my gosh. 95% ownership, 93% ownership. Not as much institutional buying as I thought, but oh my gosh. Oh my gosh. And it's being shorted like crazy. I mean, this is just absolutely insane. I really like this. We're gonna add this one. HRMY current is 35. Fair is 47. Massive growth. Oh my god, their gross margins are 81%. I would feel ridiculous not buying this. I mean, it could go down even more, but I feel like it's still heavily undervalued. Wow, I would buy this again, 35 bucks. This is a really good one. Massive growth, just massive. Sales year over year. Wow. All right. So that is page 2. Part 3 is coming soon. There are a total of 5 pages. So this is over like 2 hours so far into this, 2.5 hours. So if you guys made it this far, please subscribe. It really helps out. We're going to move on to page 3 here. It should be coming out shortly after this one. If you guys made it this far, subscribe. I hope you're doing well. Hit the like button, and I'll see you on the next one.